Good morning, folks. How are you today? Lance, good to see you back in here. Bob, Cab, Jerry, Joel, Pete, Steve, and Ram. Great to have you guys. I have double checked all my volume settings. Guys, I apologize. The last couple haven't had volume. And I don't know what's going on. I think it's my YouTube studio. But I have dotted all the I's, crossed all the T's, and hopefully we're solid now. No news to speak of today. Hey, good morning, Cav, Bob, Joel, and Jerry. No high impact news. At 1 o'clock, FOMC Waller speaks. I guess he's a little more important than Harker, Bostic, and Barkin. That's medium impact, something to be aware of. But every morning, going to forexfactory.com/calendar, checking news. Just a great way to start the day, making sure that there's no crazy news coming out to make the market spike. Yeah, Cab, it has definitely cooled down. Traders are an emotional bunch, aren't they? Good news buy, bad news sell, or vice versa. That's the thing, is you never know what they're going to do. That's why we look for the news. And just see, okay, they could have bouts of crazy Wednesday, April 16th, 8:30 a.m. I put in there again, and I'm going to start doing this once or twice a week, guys, just reminding you, repetition is how you get to where you want to be. It's doing the same thing over and over. Understanding that this is a process, understanding that when you see the same things over and over, they become easy, the market becomes slower, your decision making becomes more rapid. So what we focus on every morning, same thing every morning, is the high probability trade, guys. It's the high probability trend trade. Sell Mortimer, sell. Feeling good, Winthorpe. Guys, it's this highest probability trend trade that Nexgen teaches. It's a trade that typically wins 70 to 80% of the time. That win percentage, that success creates confidence. There's only 3 rules to this trade, guys. It's not a complicated endeavor by any means, but it does take a little repetition. So all the rules, everything that I'm going to talk about can be found in the trading guide. I wanted to give you guys that just to remind you that if you're ever, oh no, it's after hours, Mark isn't here, I need to go back and focus on trend and momentum, or I want to work on those termination conditions, you have a place to do it. We're going to focus on this highest probability trend trade because it teaches you to read your charts. And that's the goal. We're going to become chart readers. I slept great last night. You guys are in trouble. Chart reading's where it's at, guys. Chart reading is what we do. Chart reading is 90% of your day. Looking at your indicators and then just trying to make a decision. Do I have what I need to enter the market? Do I have the advantages that I need to feel good risking my money? Good morning, Steve. One of the great things about chart reading is you're going to recognize a pattern. Your pattern is the high probability trend trade. But from your ability to do that, you're going to understand a couple really key elements. You're going to understand where the market is most likely to continue. You're going to be able to identify, recognize where the market is most likely to go, and you're going to understand and learn to respect where the market is most likely to stop. And these 3 concepts will carry over into everything you do with the software. So in the very beginning, as tempting as it is to have goals that say, I'm going to get rich, I'm going to make $1,000 a day, I'm going to day trade in my underwear and make all the money I could ever spend, give yourself a couple weeks and say, you know what, I'm just going to become a chart reader first. I'm going to learn how to identify when 3 rules are met. And that's all there is for the high probability trend trade. There are strong triggers, that's rule number 1. There's nothing in the way, no termination conditions, none of those likely to stop areas. That's rule number 2. And number 3 is just to get you into the market, to define your entry. So a trade is when the rules are met, and it's because each rule provides an advantage. So here's your little equation. A trade is momentum plus a clear path, and then defining an entry area. And the way this is taught is you'll realize that once you understand the first two rules, once you can identify the first two rules, and you can look at your charts and you can say to yourself out loud, scaring the cat, I have momentum, my path is clear. You have everything you need to build a very solid trading plan, a very consistent trading plan. And your entry area, initially specific to the high probability trend trade, but then it'll lend itself to a medium probability trend trade. And then your entry areas may change a little bit if you decide to modify your plan based on your ability reading the charts. But keep it very simple in the beginning. Keep it very focused in the beginning. We're going to focus on momentum path and then defining an entry. And we're going to do it on only two charts. Less is more. I can't stress that enough. Less is more. So there's a large chart and there's a small chart. Big and little. Your large chart defines the direction of the market, lets you know which way you should be looking for your rules to be met. Your large chart will define the momentum in the market. That's rule number one coming into play, letting you know that the people in charge are pushing that market in the direction of the trend. And then finally, your large chart will define the areas that could stop the market, the areas that need to break before you look for that next trade. So rules 1 and 2 are met on the large chart. It's a very broad stroke of a brush, and it really is. It's hard to see change on this large chart. All this great information, your first two rules can be recognized and proven true in the first bar, the most current printing bar. On your small chart, this is just an entry chart. This is a refinement chart. It takes that really broad stroke of a brush that the large chart is, and it shows you the inner workings of that one bar that have already given you your first two rules. And inside of that bar, you're going to pinpoint where the market is most likely to continue. That becomes your entry. Hey, Marky Mark. It's going to allow you to reduce risk. It's going to allow you to increase profit potential. And that's kind of what we're doing is we're taking a big picture and then we're refining it down to the best of the best entry. And we're using these two charts. Who are you trading with? Who are you trading against, guys? The large chart defines all the good stuff. It defines the trend. It defines the direction, the momentum, the areas, and it's the large crowd. It's the people that are in charge. Your small chart is the fighters, the people that create retracements, tiny little pullbacks that go against everything the large crowd wants. We use the small chart and we embrace the small crowd because rule number 3 is designed to have you enter right where their failure is most imminent. And they typically fail 70 to 80% of the time when the rules are met on the large chart. So guys, when they fail at 70 to 80% of the time, it gives you the potential to win up to 70 to 80% of the time. And this is our day. And it was the same day as Friday and Thursday and probably Wednesday, Tuesday, Monday. And it's the same as it'll be tomorrow. We're going to take an hour, give or take, and just learn the trigger line and Fibonacci rules for when it's okay to trade. And it's okay to trade when the rules are met because the rules describe a pattern, and that pattern has been proven to win more than it loses. And then you could say to yourself, well, it's not okay to trade if my rules aren't met. Because if my rules aren't met, I don't have those advantages. I don't have the edge that I need to feel good about risking my money. You have the ability to simulate, to get in there and do it all. Learn how to move stops and targets and enter and exit. Try to follow rules. Be okay breaking rules in the beginning because you're just learning them. And mistakes are where you become a stronger trader. But the first step to becoming a confident trader ASAP is based on you posting those pictures, all of your trades, get them in the room. So every time you think your rules are met and you enter, take a picture. Describe the momentum on the chart to me and draw an arrow and describe whether or not rule number 2 was met. Draw an arrow and show me where you enter and show me where you exit, and most importantly, tell me why. Because when you tell me why, what you're doing is one, you're telling me how you're reading your indicators, and my job is to make sure that you're doing it well. So if there's a mistake, we cover it, we talk about it, we talk about why it's not a clear path, or why that's not momentum, or why your entry doesn't really fit the rules and how you could have done it better. The whole goal as a brand new user is to know what you're doing right and what you're doing wrong, and then we work together to fix anything that needs fixing and celebrate everything that deserves celebration. And when you write the whys, you're creating this recipe. You're saying, hey, this was a great trade, and this is exactly why I took it, and now it's repeatable. Now you have a recipe to create and repeat that good stuff. So post in the room. If it's a trade you take, post in the room. If it's a chart look that you're not familiar with, take a picture, post in the room. Hey, Mark, what does this mean? The goal is that you're sure that you have the correct rules, that you're reading your charts accurately. And then, of course, we encourage you, don't practice the wrong trades. Don't be that guy that puts 100 lot, fights everything, and when it makes $1,000, you're like, I'm the greatest trader ever. Let me go get my kids' college fund and see what I can do. That's a short-term victory, guys. It leads to long-term failure, typically. And then we are going to simplify. That's really my whole mantra is simple. 3 rules, 2 charts. I'm going to hand you a plan that only has 2 trades on it. The first trade, of course, will be that highest probability trend trade. The second trade will be what we call a medium probability trend trade. And that one is going to be based on the potential of areas to break rather than clear paths. But everything that you learn in that first trade is going to set you up to take the second trade. So just try to ignore it for a week or 2 until you get momentum and path down, and then it'll be easier for you. You have to know what looks you're going to commit to. You have to learn the looks so that they become easy. That's the second step to becoming a confident trader ASAP. I'm going to give you this. I'm going to give you this spreadsheet, and this spreadsheet has been in use with Nexgen for as long as I can remember. You should have gotten it when you downloaded the software. You should already have a copy of it in your study picks folder. Mine gets updated nearly every day, so I share it in the room nearly every day. The first tab is the basic rules, exactly what we're going to study in this first hour. What it looks like to have strong triggers. These pictures are taken, they're annotated, and they'll help you create a connection between the look and what it means to you. And then there's pictures of weak triggers letting you know when that first rule is not met. Pictures of a clear path when there's no termination conditions in the way. And again, these are annotated, showing you exactly the look and the thoughts you should be having when you see the look. And then termination conditions when that second rule is not met. And then finally, there is a little bit on those high probability trend trade entries. I've done a lot of work on this page for you. I'm going to suggest that when I give you the chart reading 101 sheet, that you go through and begin to add to these pictures and create that recognition through repetition. The second tab is the client trades, and these are client trades. These aren't Nexgen study materials. These are people that have posted in the room that have gone through the same process as you, learning momentum, learning path, working on entries. And when they start doing it great, I love to steal them and create just a way for you to go back and look at all the stuff that can be done with the software. And there's so many different people doing it. There's so many people doing it in different parts of the world. It doesn't matter what your background is or where you live. It's just patterns. So learn those patterns. There's entries, there's management, there's more patterns outside of the basic rules that tend to repeat themselves. And you'll begin to see these as you learn the very basics, the core. And that's where you'll start to build your plan. Best of the best. Those highest probability trend trades. Every time one presents itself, take a picture, write the whys, create that recipe, and get that picture into your spreadsheet. Because if you wake up every morning and you look at 20 pictures of a high probability trend trade, it's going to be easier to catch that high probability trend trade. It's going to be less stressful. It's like the market's going to slow down. And then finally, this is the real-time performance. This is your trade tracking sheet. And this is where you're going to put your trade pictures in. And you could talk about the advantages, and honestly, you could omit both of these if you wanted to, because your advantages are going to be written on the chart anyway. But the feedback from class section, guys, this is the one that I really want you to embrace, because every picture posted gets feedback. That's just how it works. And what you're going to be able to do is take that spreadsheet, and you're going to say, okay, Mark said don't miss this. This is the perfect look. And if that's the case, that's the one that goes into your plan. And then if it's a rule breaker, that's the one that you're going to say, okay, I don't want to do that. There's my challenge. This is what needs fixing. And of course, I'm going to give you ideas to fix it. And you'll begin to see that you have a tendency to lean towards breaking a rule, or you have a tendency to fight a trend, or to enter early, or to exit late. And this trade tracking sheet's going to help you identify that. And I'm going to help you identify that. So every morning, take like 5 minutes as you sip your coffee and look at yesterday's trades or Friday's trades, and just ask yourself what worked and what didn't work. Because what you're doing is you're saying, what do I want to do to find that same level of success, and what do I want to avoid that seems to be taking success from me? And you'll notice, and I think emotion, write them on the chart. You'll notice that when you're trading with the trend and the momentum is established and there's nothing in the way, your trades feel easy, and they're typically over quickly. And you'll know that when you're breaking rules, you'll begin to feel nervous, and you will move your stops arbitrarily. And you'll begin to worry, and there's a huge emotional response that you'll begin to recognize. And it's going to help you discern between the good and bad. But what this does is it sets you up for the day, and it will accelerate the learning. So we're going to take the next hour, and we're going to learn the rules. You guys are just going to simulate, practice in the room, post in the room. Every time you post in the room, it's a private session with me. Every time you post in the room, we're going to talk about the good, the bad, the ugly, how to repeat it, how to celebrate it, how to fix it, whatever we need to do. And we're going to keep it simple, guys. We're going to keep it so simple today. So let's talk about the indicators. There's trigger lines. Small triggers are 2 solid lines. Large triggers are 2 dashed lines. That's really all you need to know. When they're going up, they're green. When they're going down, they're red. You're going to see them on both charts. You're going to use them to define momentum. You're going to use them to identify termination conditions. You're going to use them to define entries. And the only thing you need to know about these lines is that these are your small triggers and these are your large triggers. Both charts will have areas. All the areas have names, but they have a different job depending on the chart. So all you really need to know is that a divergence high is a magenta line that prints. If there's a loss of momentum at a pivot, red Fibonacci resistance, yellow 1-to-1s, blue Fibonacci support, divergence lows, those print if there's a loss of momentum at a pivot from a low. Know the names. On the large chart, they could stop the forward progress of the market. On a small chart, we're going to use some of these areas to create the bounce in the direction of the trend. And we're going to use these to define entries. So we're going to go through the 3 rules. We're going to break them down individually. I'm going to teach you how to study them. You're going to have everything you need, guys. By the end of this first hour, you're going to have everything you need to find success with the software. Rule number 1 on the large chart. It's important that you understand where the rules are found. Large chart must have strong trigger lines because we're looking for that advantage of momentum. The only way to have strong triggers, guys, is to trade with the trend. So green is up, red is down. How easy is that? And in an uptrend, strong triggers means that your small triggers are above the large triggers. The large triggers are wide, and there's space created between the two. It looks like scissors that have just opened up. In a downtrend, smalls are below the large. Space is created between the two. Those scissors are open. And when those scissors are open, the odds are favorable for the market to continue in the direction of the trend. And odds favorable momentum is what we talk about every day. It's the advantage of momentum, but we call it odds favorable momentum because odds favorable paints a picture. It makes you feel good about the potential of that market to continue in the direction of the trend. This is the exact same look that's going to give you the potential to break key areas. And a lot of times momentum will even cover some of the mistakes that we tend to make as new users. But momentum doesn't last forever. Eventually the scissors close and the small triggers work their way inside of the large triggers. This is a weakness. It's a weakness, a weakening of the large triggers. And when you have weak triggers, anything can happen up or down. So you've got to make the decision. Do I want to trade with strength where the odds are favorable for it to continue in the direction of the trend? Or am I content trading with weakness when anything could happen up or down? And guys, that's typically the easiest lesson you're ever going to get. And this is crude oil. And there's strong triggers. It's a separation between the small and large. And there's weakness. There's the small inside of the large. And it really is that black and white. And then there is strength. And now the small triggers are returning to the large. And if you go back, it has nothing to do with the fibs. It has nothing to do with divergence lows. It has nothing to do with yellow 1-to-1s. It's just a separation. Two triggers with space between the two. And guys, that's rule number one. That's probably the easiest lesson you're ever going to get. Is everybody good with that? Strong triggers, guys, it leads the way. It's hard to stop a market when the large chart has strong triggers. But there's something that can. We call them termination conditions. So we have to make sure that none are present so that there's room to the targets, making sure that we have a clear path. Termination conditions are just horizontal lines on a large chart. Termination conditions come from the large chart. It's blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s, and either of those divergence highs and lows. All of these areas may stop the market, may create an untradeable bounce, could reverse it completely. These are the areas where the large crowd is making decisions, where buyers buy and sellers sell. So the idea is that you're going to let the market get to one of these areas, and then the decision making happens, and the triggers are going to tell the story. So to identify a termination condition, we let price reach the area, let the large crowd reach the area. And when price reaches resistance, the only thing you have to do is ask yourself, where are my triggers? And if your triggers remain below resistance, resistance is a termination condition. And it almost sounds too simple. Price reaches the area, where are my triggers? If the triggers remain below resistance, it's a termination condition. If the triggers remain above support, it's a termination condition. And once price reaches the area, we're done with price. It's 100% the burden of the triggers to let you know what's going on. So if my triggers remain below resistance or above support, there are 4 things that may happen. And I'm going to give you guys this picture. The first thing that could happen is the area could break and just continue in the direction of the trend. The second thing that could happen is there could be a fight. And that fight could dissect a fib for a minute or an hour. The third thing that could happen is an untradeable bounce. And the fourth thing that could happen is it could reverse. And these are the options, always. And you never know what the reaction's going to be. So, Lonnie, how do we handle a situation when there is no area in the 5-1 chart to place your entry? So, Lonnie, are you asking me, Mark, if my rules aren't met, how do I break them to take an entry? I just want to make sure I understand the question. Yeah. I don't know. If you feel like you need to break rules, you need to create a new plan that's void of entries. It would be irresponsible for me to try to create scenarios outside of the rules just so that you could be active. Yeah, Lonnie, you're one of a million people that have asked the same question. Hey, Mark, there were no entries. Where do I get in? Well, you don't, because there's no entries. But Lonnie, I'm gonna expand on that. The more you see in the market, the more time you spend in the market, the more likely you are to answer that question for yourself. And if you have some for instances, feel free. One of the gentlemen in this room, Ron, created what's called the chili dog trade, which has nothing to do with areas. There's ways to do it. I can't give you every option to enter the market. We would be here all day. There's a million ways to do it. So initially, let's do it the highest probability way. You'll come up with your entries and then post them in the room and we'll talk about them, I promise. So guys, if price reaches an area and the triggers don't break, wait for the reaction. Sit on your hands. It's either going to break, there's going to be a fight, maybe a big untradeable bounce, and then it continues in the direction of the trend, or it may reverse, guys. And I want to talk about reversal. If it reverses from a high or a low, it creates what we call a strong top or a strong bottom. And a strong top is the precursor to the highest probability trend trade short you could ever take, and a strong bottom is the precursor to the highest probability trend trade long you can ever take. And a strong top or a strong bottom is rule number one for pretty much every trade beyond the high probability trend trade. So knowing that because decisions were so impactful in a key area that the market reversed, it sets you up for a little nicer stuff going the other direction. But the black and white of it is if rule number two is not met. If price reaches an area and the triggers don't break, price reaches an area and the triggers don't break, 1, 2, 3, 4, oh my gosh, just over and over. Look, there it is again. There was a big untradeable bounce. Just simply no trades into the area. Wait for the reaction. And it's going to do one of those four things. It's going to fight. It's going to untradeable bounce. It's going to break. It's going to reverse. So price reaches resistance, and I'm done with price. Where are my triggers? They remain below resistance. Absolutely no trades into that area. If it doesn't reverse, fight, or create an untradeable bounce, well, then it's going to break, right? That's the only other option. This is what it looks like when it breaks. An area is considered broken. We're gonna go to number 3. An area is considered broken when both your small triggers and your large triggers, both lines of each, get above that area of resistance. Once an area is broken, your path is clear. Rule number 2 is met. Your path will actually remain clear until you reach the next area. So as long as you have momentum and separation, you're looking for entries. You're going to go to your small chart, you're going to look for entries. But there's the transition as an area is breaking. And that transition is the second trade look in the plan I'm going to give you. And we call this a 50-50 trade. Not because that's your chances of success, although it should kind of ring a bell, says this isn't perfect. If 50% of your triggers, the smalls, absolutely smash through the area with momentum, but the large are lagging behind, they're still below the area, as long as momentum is present, and really only if momentum is present, because momentum has the potential to break areas. This area has the potential to break, but it's only the potential, which means that your trades, if you take one, they need to be managed a little more assertively. You need to rely on your chart reading to make sure that you see change that might upset the apple cart. So first it's a termination, and then we're done with price. The triggers still tell the story. Then it has the potential to break, and then it's broken. First it's a termination. Every line is going to be a termination for at least a moment. Then it has the potential to break as long as there's momentum, and then it's a clear path. And that path remains clear until you reach the next area. So is everybody good with that? Once again, let's just go to our large chart. Perfect termination. Perfect termination creates an untradeable bounce, and then the market continues. It only had the potential to break, retraced big. Termination, didn't break, didn't break, didn't break, didn't break. So what you can do is you can say, wow, I know exactly where on my large chart the market has the potential to fight, to bounce, to break. Good morning, Miss Cindy. Nice to see you in here. And then you can simply choose to wait for the reaction. And I'm going to tell you that rule number 2 is the most broken rule among new users, because rule number 2 is going to force that patience card, that 90%. So there's going to be times when your path isn't clear, because the areas are stacked. You may have fib after fib or divergence fib 1-to-1, but multiple areas, and you just can't seem to get a clear path, guys. This is 90% of your day. True story. This is 90% of your day. And it's just better to do nothing. Wait for the reaction. And it's okay. And this is the part that people forget, is the futures markets, they trade trillions every day. Billions are exchanged every hour in the futures markets. You don't have to be in every move. You don't have to be the first one in or the last one out. And we saw this last week a lot in the room. People were finding success trading away from these termination conditions, trading away from Fibonacci areas, and getting paid at the next one, and then going back into that patience mode, waiting for the next best setup. Is everybody good? Can you give me a why? If price reaches an area and the triggers don't break, it's okay to sit on your hands and do nothing. It's okay to wait for the reaction. Eventually, things will change. Eventually, you'll get that potential. Eventually, you'll get that clear path. And when you do, you can look for entries. There's one more termination condition that we are going to talk about. This termination condition presents itself on every time frame, but you're going to see it first on the small chart. And it's 3 divergences, 3 losses of momentum in the same price range. It could terminate a trend. And you won't see the change coming on the large chart, guys, because it's such a slow-moving chart. But you'll see it on the small chart. It'll give you a heads up. 3 losses of momentum in the same price range can terminate a trend. And guys, this is the only termination condition on a small chart. That yellow box is surrounding the large chart, bars. All of this works within there. So it just says, hey, things are changing, be careful. And you're going to use that refinement, that faster, that multiple bars to define your entry once you have momentum and a clear path. Once you have the first 2 rules met, you're going to use a limit order to buy or sell a pullback in an area inside of triggers. You're going to use a limit order, which means you're going to wait for the market to come to you. And you're going to use it, to buy or sell a pullback, a push down against the trend or a push up against the trend. And you're going to do it in an area inside of triggers, guys. And that's the whole phrase. I'm going to buy or sell a pullback at an area inside of triggers. Because triggers are where price tends to return. These are just moving averages. So price pulls away from triggers and then they go right back to triggers all day long. So we're going to use the large triggers from both charts to define where the retracement's most likely to happen. Your entry chart has 5-1 large and 13-2 large, and price may return to either. So from the highest line of the large triggers to the lowest line, this is where that retracement's most likely to go. There's a way to kind of beat the system a little bit, and that's insist on favorable large triggers, especially if you're brand new. This is going to increase the accuracy a lot. Favorable large triggers mean that those large and synthetic, the 5-1 and the 13-2, they're just overlapping. They're one on top of each other. And all that means is that there's only one location that the retracement's most likely to go rather than 2. And favorable large triggers are going to increase accuracy. And favorable large triggers are going to give you the smallest possible range where that market's most likely to bounce and continue when you put areas inside of those trigger lines. So to define an entry, first the large chart rules must be met. Small chart is going to look like this in an uptrend. Everything is screaming on the large chart. Odds favorable, momentum, nothing in the way, and it's just going. And your small chart is going with it. And there's going to be this little piece of you that begins to get worried. Oh my gosh, it's going without me. What am I going to do? How am I ever going to get paid if the market's just running up? And you're actually going to wait for a reversal bar. You're going to wait for that small crowd to fight. And this is your pattern. This is the beginning of the pattern that's going to help you create success. When everything's going up on the large chart, we want the small chart to go down to get us to our entry. The reversal bar signals the beginning of that pullback, of that fight. And then you just have to define where is that retracement most likely to occur. somewhere from the top of the triggers to the bottom of the triggers. This is the most likely spot. And the tighter these triggers are, the smaller that box becomes as far as retracement goes. But trigger lines are not your entries. Once you understand where the market may return, you need areas. Areas are where entries happen. And areas can be fibs, mid-bands, or yellow 1-to-1s. And those areas need to be inside of the triggers. Not below the triggers, not above the triggers, but inside of that retracement zone. So this box, from the highest area inside of triggers to the lowest area inside of triggers, it shows me where the market is most likely to bounce in the direction of the trend from the large chart. It's a window. I like to call it the window of opportunity. This is showing you precisely where that small crowd is most likely to fail. And guys, that's it. That's where the good stuff happens. So you're going to activate a limit order. You're going to right click on your chart and you're going to set up a limit order 2 ticks above that highest point of support inside of triggers, or in a short trade 2 ticks below that lowest point of resistance. And you've done all you can do, and now it's up to the market to give you an entry. But if they do, this is where trades feel easy. If price reaches your order, you're in a long position. And you have the advantage of a market where the odds are favorable for it to continue up because of those strong triggers on the large chart. And you have the advantage of a clear path, giving you room to your targets because there were no termination conditions on the large chart. And you have the advantage of having entered precisely where the market was most likely to continue because of rule number 3. And guys, this is your high probability trend trade. This is the highest probability entry I could ever teach you. This is the one that is going to teach you to read your charts, recognizing advantages. This is the entry that's going to give you the highest chance of success. So let's focus heavily on getting into the market where the market is most likely to continue. So here's the process, not broken down. So first, the reversal bar begins the pullback. It's not your entry. You're going to identify where the retracement is most likely to occur. That's the red box from the top of the triggers to the bottom of the triggers. And you're going to say, okay, those price bars could come down here, but triggers aren't my entry. I'm not just going to jump in at a trigger. I need an area, and I need that area to be inside of those triggers. So in this case, I have a mid-band way up high, and I've got some 1-to-1s down below. The market may bounce from either of these areas, so I'm going to create that window. That blue shaded box is my window of opportunity, where the small crowd is most likely to fail, where the trend is most likely to continue. And by going through the process of understanding that this is the most likely area for a bounce, it keeps me from believing that anything below the triggers, beyond the retracement zone, beyond those areas most likely to create a bounce, I learned to ignore these lines. Anything below the triggers for a long trade, anything underneath that retracement zone, beyond those areas most likely to create a bounce, guys, it's not part of the equation and it's not part of the window. And this is where the market should not go. And then the same is true on a short trade. The reversal bar starts the pullback, and it doesn't, that's not my entry. This is the beginning of the fight. And I'm going to look at those trigger lines, and I'm going to say, this is where that fight's most likely to go, but the trigger lines are not my entry. I need areas inside of those triggers. That's okay, Cindy. What did Jason say from Tech? Has Jason been on your computer yet? That would be my first thing to go. Or show me a picture. I'll help if I can. Guys, the mid-band inside of triggers is where the market is most likely to bounce, to continue with the trend. And anything above those trigger lines is where the market should not go. This is where rule number 3 is no longer met. This is where the advantage is gone. The market's already gone beyond the retracement zone. Show me a picture of what you're working with, Cindy. Tell me what the problem is. I'll see if I can fix it. And we're going to use that idea of defining where the market is most likely to continue and in creating that understanding where the market should not go. And that's going to be your initial stop, ladies and gentlemen. You're going to say to yourself, if that push can go beyond the retracement zone, if that push can go through the areas most likely to create a bounce, I don't want to be in that trade anymore. My advantage is gone. My edge is missing. Will you please just show me the picture and let me see what we can do. That'll help me. I would always say reload template first. And guys, this is going to be your initial stop placement, where the market should not go. And you're going to find yourself willing to accept that loss. You're going to remind yourself that this is a pattern that typically wins 70 to 80% of the time. And because of that, it's obligated to lose 20 to 30% of the time. And when the rules are met, guys, this is what we call an acceptable loss. This is a loss that's going to happen. You can't keep it from happening, but you're okay with it because it comes from a pattern that wins more than it loses. Avoidable losses, not having the momentum, not having the clear path, entering from the wrong side of the triggers. Avoidable losses are the account killers. So what we're doing is we're learning to take the highest probability look, understanding that it won't win all the time, but it's okay that it loses every now and then because you're going to win more often than you don't, most likely. So you've got to find the pattern. And this is it. This is both charts. Strong trigger lines, no terminations. Everything says up. And your entry comes from the area inside of favorable large triggers. One of the easiest ways to build trust on this one, one of the easiest ways to recognize this pattern is to stare at it when the market isn't moving. Go back historically, and anytime your rules are met, if you see one of these tails are the pullback. And we're using the areas inside of favorable large triggers to define where that tail is most likely to happen. We don't take entries or trade tails on the large chart. We trade areas inside of favorable large triggers on the small chart. But we can go back and we can say to ourselves, okay, my rules were met and there's one of those tails. Or this one had the potential to break and there's one of those tails. And then once you circle those tails, you can open up a small chart. We're not even taking trades, guys. We're just studying patterns. And you can say, yep, that pulled right back to support inside of triggers. And that most certainly pulled right back to support inside of triggers. So you're studying these patterns, creating recognition through repetition. And you can just scroll back over and over. And what you'll find is that maybe there's not a trade every 8 minutes. Maybe just because the large chart says it's time to look for an entry, hold on, where'd it go? Your small chart, well, that one's pretty nice. Momentum, potential to break, pull back, right to the bouncy point in the retracement zone. Are you guys with me? This is how you're going to study it. You can scroll back 10 days. Momentum and path. What's it look like on a small chart? It's a perfect pullback. And guys, this isn't me going back and finding pictures that I took because I couldn't find more than 3 or 4 and I'm trying to convince you. This was the 13th. This was the evening of the 13th. Last night when the markets opened. There it is. And you can scroll back and just keep doing it. You'll be floored at how often these patterns repeat themselves. So, guys, that's your high probability trade. That's the best of the best. And the easiest way to get good at this is taking pictures. So I'm going to give you everything you need right now. I promised that I would, and I'm going to do it. Let's make that so we can read it. And I'm going to put it in the form of a zip file in the room right now. Cindy, will you show me a picture? Sometimes if I see it, it's easier for me. The goal is that you look at your large chart, guys, is that you identify advantages. And the first 2 advantages that you really need to be in tune with is those strong triggers and the clear path. So go take 25 pictures of each. Strong triggers and a clear path. Annotate the chart. Why is it strong? What's the look? What does it mean to me? And then do the same for weak triggers and termination conditions so you know the difference. And if you take these and you go put them in your spreadsheet and you start to build this list and you just study it a little bit every morning, right? Strong triggers. Let's click on one. What is a strong trigger? Oh, look at that. Smalls above the large, they're wide, space between strong triggers, momentum, rule number one met. And there it is in a downtrend. And guys, that's all strength is that separation of the triggers. But if you go through and do that, you're not going to mistake the two. And as you learn those lessons, there's pictures for you to make sure you're taking the right pictures. Terminations that reverse the market are strong tops and bottoms. This is strength, this is weakness, know the difference. That's a termination, that's only the potential, that's a clear path. Know how to identify it. Pick your entries. And then there is the second page. It's just the 13-2 chart, Cindy. So right click on it and reload historical data. And let me know what that does for you. That typically fixes it on a Monday morning. Right click and reload historical data. Let me know if that works. And then guys, print this out. Print this out and police yourself and write these rules on the chart and make sure that you can identify them and know what they mean to you. And then finally, there's the KISS plan, guys. And this is your path to get you where you want to be. And your goal should be adherence. So Lonnie posted in the room and he said strong triggers, absolutely. Strong top without a doubt. And he says, I don't have a clear path, Mark. Price reached an area and there's no triggers through, but I'm going to break my rules anyway and I'm going to get in early. And I'm going to put my stop. And so Lonnie, the one thing that you have to understand, hey, Better Dad, good to see you back in here, is that when you break your rules, right, this isn't where the market shouldn't go anymore. The market, you don't know what's going to happen. So you have to manage assertively, right? And you get in and you get paid at the area and you do a great job. You do a great job because you know what you're up against. You know you need to manage more assertively. Does that make sense, Lonnie? Because you know the path isn't clear, you have to be willing to exit if things go south for you. And then the easier one, of course, strong triggers, potential to break, 50-50 trade. Once again, perfect entry, aggressive management. And all you're doing is capitalizing on these looks. I love it. And then one more time, momentum, potential to break. And Lonnie, what rule did you break here? Here's your triggers. Here's your area inside of triggers. Did you notice that you jumped in early on this one, Lonnie? That those 1-to-1s aren't inside of the triggers? That your entry was the mid-band. So guys, this is one of the great things, and Lonnie, thank you so much. I want to get you the feedback before you go. Lonnie had a perfect look on his large chart, but he entered early on his small chart, which means that your risk was much bigger than it needed to be. And it also meant that your room to get to that next fib was shortened dramatically. Perfect read on the large chart, Lonnie, and then a little bit of patience gets you in at the area inside of triggers. Does that make sense? Great job, though. And guys, this is what we do. Lonnie has to go to work, so he's like, hey, Mark, I need the feedback. I need the feedback before I split. And Lonnie, rock star, rock star. Uh-oh. A little premature. Could have done a little bit better. Could have had a little less risk. Great job, Lonnie. Hope you have an awesome day at work today. And guys, I will always do that. If you have to go to work, just say, hey, Mark, I got to go to work. Can I get a little feedback on my charts before I split? And the answer is always yes. But let's talk about the KISS plan. How is the KISS plan developed? We're going to tell a story this morning because you know I like stories. I had a gentleman call me once. One of the sales reps says, hey, my guy needs to talk to you. And I said, all right, let's talk to your guy. And he'd been with Nexgen for a while. He owned software, and he called me and he goes, Mark, I can't find an entry. I can't win a trade. And I asked him, and I said, okay, well, what kind of trade are you looking for? And he just started vomiting. I'm looking for a high probability trend trade, a medium probability trend trade, a counter trade, an HVA trade, a momentum trade. I'm looking for an edge trade. I'm looking for a gap trade. Mark, I want to make all the money. And guys, he had so many rules to learn and so many looks and so many managements. He couldn't come up with anything. His brain just froze, deer in the headlights. So we came up with this plan, or at least the foundation for it. And I said, let's keep it simple. Let's focus on the best trades instead of all the trades. So guys, this KISS plan came to be to keep new users focused, to help you find a level of success as you learn to read your indicators. So this plan is very much a stepping stone in your learning journey. It's not at all the only trade. It's the best. It's the one that teaches you to read your indicators. And this plan is designed to optimize your chances of success. The highest probability way to take this trade as a new user, and then through simulation, study, class feedback, and continuous practice, well, you're going to create your plan based on your ability reading the indicators. But until you can do that, there's no reason not to embrace a plan that's been proven to win more than it loses. And there's two things you have to know before you sit down to trade and you're not on simulator. You have to know why you'll enter, and that answer should be because my rules are met, because my rules are a description of a pattern that has been proven to win more than it loses. And if you take the time to go circle those tails, to study that look, to verify that it does in fact win more than it loses, there's no reason to never enter when the rules are met. And your rules help remove a lot of the emotions. And then you have to know why you're going to exit. And this is where most people struggle. And it's really just either because my targets are hit, whether they're predetermined or in an area that could stop the market, or because my advantages are now gone. And this is why I stress so heavily in the beginning of class every day to be able to recognize advantages, to know exactly what you have working for you. Or like Lonnie did in his trade, he knew that he didn't have a clear path, but everything else was perfect. So he was willing to take that trade based on momentum in the perfect entry area, and he was willing to manage it assertively, and that's kind of how plans grow. So define your entry, know why you'll exit, and it's just because advantages are gone. So if I enter where the market is most likely to continue and they go 4 to 5 ticks beyond those triggers, I'm willing to take an exit because my advantage is gone. Or if 3 divergences print in the middle of my trend trade, I'm willing to exit because my advantage is gone. And all we've done so far is define entry. You guys are learning as a brand new user how to pinpoint where the market is most likely to continue, because the reality of it is that these great entries create very manageable trades. These great entries, what they'll do is they'll reduce risk dramatically. We saw that on Lonnie's chart. By getting in early, he increased his risk. Great entries increase profitability because you're furthest away from your targets. So once you enter the trade, you've got to go into that realm of managing. Management, Cindy, did that work? Sorry, Squirrel. Did that work reloading historical data? No. Do you have a ticket in with Jason? Sorry, guys. You're working on... All right. Just follow your patterns. You got this. The other thing you can do is click on your small charts, your large chart, and hit F5, and that'll reload the historical. Sorry you're having troubles this morning. Guys, once you're in the market, you've got to manage it. And the same way the KISS plan is designed to put you in the best of the best, the KISS plan management is designed to remove a lot of the emotion. And it's based on 2 contracts. The first contract is going to teach you to get paid. The second contract is going to teach you to trust the large chart. And that's why we do 2. And it's 100% dependent on you entering the market where the market is most likely to continue. Oh, there you go. Steve Diego had one for you. Thank you, Steve. And guys, if my entry, it's all if then. If my entry is 2 ticks below resistance inside of triggers, then my initial stop is 4 to 5 ticks beyond the triggers. And that's it. And guys, I want to address this. The challenges, because of the volatility in the market, your platform, NinjaTrader, is taking in like 10 times the normal data, and it's creating a little hitch. And of course, we're working our way around these things best we can. And I wish that it was an easy Nexgen fix, but it's a NinjaTrader fix. So thank you, Steve and Better Dad, you guys that are working around it and sharing your remedy. If I enter at 34, then my stop is 49. It's $150 per contract. That's where the market shouldn't go. And you will know your risk before you ever enter the trade. And that's kind of a nice thing, because you can either accept the risk or choose not to trade. Because if you arbitrarily put a stop in the retracement zone below an area likely to create a bounce, then you run the risk of getting stopped out of that trade and then just watching it run without you. Targets are predefined at $100 and $200. So if the stop isn't hit, then you're going to get a reversal bar in the direction of your trade, and it's going to redefine where the market shouldn't go. And I'm going to encourage you, new users, people that tend to have fearful stop movements and target movements, let this play out. Practice it on simulator for a couple weeks and build a little trust. Because now you've got $30 risk per contract once that reversal bar prints. You've redefined where the market shouldn't go. 2 ticks above that reversal bar. And it doesn't mean that you're guaranteed to win, but it means that if you lose, you lose small. And if it doesn't hit that small stop, it goes to your first target. And this is that memory, that confidence coming through the memory of success, guys. Your first target was only $100 away from your amazing entry, and now there's $100 in your account. And you're going to move your stop to break even, and you're going to say, okay, I've won. I've got absolutely nothing to lose. Let me use that second contract to learn how to trust the large chart, to trust the momentum, to trust that clear path. So you're break even and money in the bank. And if it doesn't get you break even, it goes to your second target. And that second target is only $200 away from your great entry, which means that it's a $300 trade. And that's typically 3 to 4 minutes of your life for that $300 trade. That's not your trading day. That's $300 in that trade, guys. And if that's the best you do every day, that's a $75,000 a year. Did you know that it only takes $400 a day to create a 6-figure income based on your trading? So the goal is to keep it mechanical, to keep it focused, to learn how to enter, and then learn how to get paid. Win large, lose small, words to live by. And guys, that's your KISS plan. That's your first step, and it takes you to that 50-50 trade. And that's on the plan as well. But I dropped that zip file in there. Everything you need. And it's got your KISS plan. It's got your chart reading 101. It's got your high probability trend trade checklist. It has the PowerPoint that I used to teach every day. You've been given the spreadsheet. And guys, you have everything you need to be successful at this point. You have rules, you know where to find them, you know how to study them, and you have the ability to get feedback on everything you do every day, right or wrong, so that you can grow. And that's what the second half of class is going to be, is we're going to work together, and we're going to look at everything that you did the same way we did with Lonnie. And I didn't bust Lonnie's chops for trading into a termination condition. What I did is I made sure that Lonnie knew he was trading into a termination condition, and that's through his annotation. And what this does is it says, okay, I know I have momentum, and I know I don't have a clear path. And Lonnie, the one thing I didn't see, this is not a 50-50 trade. That is directly into a termination condition, 100%. I missed that on the annotation. So I get to correct and say, hey, this isn't one of those potential to breaks. That would have happened down here. What you did is trade into a termination. But with those strong triggers and no divergence, you had a fighting chance to retest it. Does that make sense, Lonnie? Not a 50-50. directly into a termination, which means that you're out of the realm. But the entry and all the momentum made it where you could get paid. So as we go into the second hour, guys, we're going to look at everybody's charts. Not yet, they don't. They didn't want to break that one either, Pete, but they did. And then when they did, if I'm not mistaken, they gave you a chance to make a little money. So who knows? Maybe the pattern will repeat itself. That seems to be what the market does. Guys, we're going to get into the second hour, and we're going to address every picture, momentum path, entry. I'm going to tell you that you broke a rule, not because it's my job to tell you how to trade. It's my job to point out the advantages on the chart. So every chart presented, we will discuss momentum, path, and entry. No matter what your plan is, because this is an educational room, we're going to talk about momentum, path, and entry. And we're going to look at your entries, and we're going to look at your exits. And if there's a way to do it better, less risk, higher profits, we'll discuss it. And I want you new users to avoid being the trade police. So you're going to see people that trade into areas. And it's not your job to say they did it wrong. Maybe they have a different plan than you, and that's okay. Take the lessons, move forward, take what you need from each presentation, but focus on momentum, path, and entry. Focus on your journey. And what'll happen is if you don't waste your energy being the trade police, you can focus on your own success. I'm not going to be the trade police either. So guys, go stretch your legs. I'm a big fan. Take a break every hour or two. Get away from your computer. Don't stare at it, because if it takes a while, and like Pete was saying, if an area just keeps holding, you're gonna say, well, I know my rules aren't met, but maybe I should try it anyway because I'm tired of waiting, right? And that happens sometimes. The longer you wait for a trade, the more likely you are to fabricate a rule. It says no more shorts now, right, Pete? Not no more shorts forever. No more shorts until it breaks. No more shorts until my rules are met. The next trade's always coming. It always is. And once you believe that, it's easier to sit on your hands and do nothing. So I'm gonna walk away for 5 minutes, guys. When I come back, we'll start doing all the chart reading. Please post in the room if you have a question. Post all your charts in the room. Let me know what you're looking at, what you're thinking, what you did. And I'll be back in about 5 minutes, guys. See you in a few. Here we go. Second half of class. And there it is, terminations for the win. I love it. I'm going to scroll up to the very top of the room and I'm going to start clicking on charts, y'all. Joel doing some middle of the night trading. And the patterns are good. Strong triggers, clear path. So Joel, the one thing that we see on here, and I'm not sure if Joel's even in here, entry at strong support. And I don't know what that means. But what you don't have is an area inside of triggers, which means that once you get on the wrong side of those triggers, you don't know if or when the market's going to stop. So you have to be a little careful with that. Odds favorable, clear path, inside of triggers, and the market goes down. Since Joel's not in here, we're going to go quick. It's just a nice pattern. And then this one doesn't, let's see, odds favorable, clear path, just below the mid band inside of triggers, and that one just didn't work. Didn't hold on too long. Got stopped out where the market shouldn't go. Got stopped out where the market shouldn't go. That's okay, guys. That's an acceptable loss. That's part of it. One of the things, and Lonnie, I see you typing. Are you still in here, Lonnie? Quick little lesson. Guys, if your large chart is perfect, but your small chart isn't, Lonnie said, how do I get in if I don't have areas inside of triggers, Mark? Some people will wait for that confirmation bar, that reversal bar to get them into the market. Large chart's perfect, small chart's not. Let me force that reversal bar in the direction of my trade, and I'm willing to see if the market moves with the large chart. So Lonnie, that would be how some people break rule number 3, because rule number 1 and 2 are so good. All right, Cav, 1, 2, 3 of them. I love it when you guys post in triplicate. Clear path, little fib update got you there, right? And guys, this is a great lesson. Place a limit order inside the synthetic trigger. And Cav, you just jumped in, right? How could you get a limit order on the way up? Okay, do you want to watch it on YouTube, or do you want me to just not look at your charts until you get back? Either one's good. We'll just cover yours when you get back. Let me know when you get back, and we'll cover your charts. And then I'll just go to Pete. I don't even know how many that was. Hold on one second. I'm going to scold you, Cav, is what I'm going to do. So let's go through it. I'll go through Cavs, and then Cav, we'll talk when you get back too. So odds favorable, potential to break, and instead of waiting for the pullback to the area inside of triggers, Cav just jumps in. I don't know how there was a limit order inside of synthetic triggers if the entry is all the way up top. It bounced off the triggers, and then it pulled right back to the bottom of that retracement zone, and it gets stuck in the retracement zone, and it doesn't become a rules-based trend trade until over here, where it pulls back, and it does make that mid-band inside of triggers. And that's when it continues off. And guys, this is a great example of insisting on the rules being met. This is a fearful entry. There's absolutely no areas. I've never in the history of entry said jump in at a synthetic trigger. It's amazing how often this pattern repeats itself, how often it does get back to that area inside of triggers. And you just had to be a little bit patient. And then down here, you have a lot less risk, and you've got more room to get up to trouble. It's a great trade. It's a good hold based on understanding where the market shouldn't go. But simply waiting for the rules to be met, squashing that fear of missing out, creates a little more profitable trade. And then here we go again. Early entry, and it it pulls right back up to the mid-band and then heads back down. 3 divergences, holding through a potential termination. You did have those triggers. You did have path right to the top of the retracement zone. Early entries seem to be a theme today, Cav. There it is again, jumped in. Potential to break, jumped in, turned into a trend trade again. So 3 for 3. Does everybody see that? And I'm not saying Cav's doing anything wrong. He understands where his stop needs to go. But that's 3 jump-ins that turned into trend trades. 3 jumping in low only to have it pull back high. Or 3 jumping in high only to have it pull back low. Guys, there's a reason that rule number 3 is in place. Because it's a pattern. Pulls back to the mid-band. It's a pattern. Pulls up to the mid-band. It's a pattern. Pulls up to the mid-band. And it's that pattern that creates success. It's that pattern that reduces risk. Good stuff, though. Pete, everything says down. Miss the trend trade. Get in a tick below the 1-to-1s. That's your entry. It's coming off of the mid-band. And then when that momentum starts to go away, you choose to exit. Termination, odds favorable. 3 reasons why I didn't take it. Divergence, mid-band between the triggers, too much risk, too much separation. Right on. Pete, I still respectfully disagree on the mid-band in the middle. It's in the retracement zone, but because it's in the middle, it does create too much risk, and I agree 100% on that. Potential to break. Pulls right back to the mid-band inside. Easy money. Good start in the live account. Triggers rolled up, separated, odds favorable. I'm assuming it's the potential to break at 04. Where's 04? We're right about here. 1 divergence, 2 divergence, 3 divergence, 4 divergence. And you say with this level of momentum and nothing in the way, you're willing to take the entry at the lowest point so you have the least amount of risk. And nice trade, Pete. Termination, odds favorable. You let it break the bouncy point. Easy money on the way down. And maybe a little tight. Maybe a little tight on that trailing stop. Not giving it any room to run at all. But there's also Pete saying, if it pulls back, I'll just take the trend trade. I'll make money on this one. And if it pulls back, I'll take the trend trade. And that's exactly what he did. I love it. I love it. Pete says, I don't have to hope. I'm a chart reader, dagnabbit. Jerry, right click on your small chart, go to data series, bottom of those options is print markers. Give me 1 second and I'll go to it. And then Pete, great job. Get in, losing the momentum, knowing that you'll take the trend trade if it sets up. Great job on that one. So Jerry, right click and go to data series. Scroll all the way to the bottom, and under plot executions, you want text and markers. And that'll get you squared away. And then just click apply. And I want to talk about this one just a little bit more for you newer users. There's always another trade coming. You have to believe that. There's always another trade coming. Oh no, Jerry. Hey Jerry, I know on the weekends we're technically not here, but I do spend time on my computer, and this is for everybody. Feel free to send me a message in Discord, and if I'm around, I'll answer. I'm always glad to help. Don't frustrate yourself on stuff like that. One of the other things too, I think I forget about this too sometimes. is the internet's amazing. Turning on trade markers in NinjaTrader. So there's probably something in there too. Perfect example. There's always another trade coming. All right. And then fib updates. Small chart has changed. Divergence mid-band between the large triggers. Need a confirmation bar to go short again. Oh, right on, Jerry. I think a lot of new users do that. Newer users do that. You're like, oh, I can't. Guys, I can't wait for Monday morning. I get excited about Monday morning. But I enjoy my weekends too. I definitely enjoy my weekends. Watching the Masters this weekend, man, that was some great golf. All right, Miss Jen. Let's see what we did. Perfect termination. Everything rolls. So guys, strong top, odds favorable momentum, and Jen just takes a momentum trade. She says, let me get below the trouble, and if momentum dies, I'll exit, break even. And Jen, you took exactly what it gave you. I would take that one all day, and usually that one makes the mid-band. It just didn't. Good trade, no harm done. And guys, the trade that she took here is nothing but momentum and path. Notice that there isn't a pullback. It's just momentum and path. And when the momentum dies, getting to the wrong side of the triggers, she exits. Her advantage is gone. Great job. Odds favorable, clear path, pull back to the area inside of triggers. No idea how big the pullback was going to be. Large risk, could have taken confirmation bar. I agree. These one-to-ones started printing after the pullback. And that doesn't really... That's just because the pattern was fixed there, Jen. Those one-to-ones are the same distance as that right there from these. That's all it is. Had nothing to do with the trade. It's great. And I love that when you guys say, I don't like the risk, I know where my stop should go and I don't like the risk. And you choose not to take it. And that's great. Or, like Jen said, she could have entered on a reversal bar because then it redefines where the market should not go. And that's the lesson that I want to take from this one. If the risk is too much, by waiting for the confirmation bar, it redefines where the market shouldn't go. Because your stop placement is 2 ticks above it. And that creates an option and an ability for you to still enter the trade and kind of redefine that risk. Great stuff, Jen. Great patience this morning. All right, Cav. 50-50, odds favorable, potential to break. Entered 64.75, just above the fib. And makes money with all that momentum. Great job, Cav. Another one from Cav. Termination. Small triggers are down. Counter trend trades. So 3 divergences in the same price range, right at a termination condition. And Cav says, let me see if I can just take a little snippet. I'll just jump in because of the termination and we'll see what happens. Cindy, has Jason not gotten back with you yet? He's got a lot of tickets in line. You don't know? But are you waiting for him to respond so that he can help you? Okay. Jerry, you don't have to. You don't have to annotate in the chat box. Just let it be on the charts. I mean, you're welcome to. But good stuff. All right, Bob, be the man. I mean, you can. You're welcome to. I just don't want you to feel like you have to do it. All right, first trades Monday AM. Why take these trades? Odds favorable momentum. Mid-band dance pattern. I don't know what that is. Momentum on small and large. Entries are solid. Minimal risk. Divergences on small chart call for aggressive management. So 2 trades. Weak bottom. Strong triggers and the potential to break. You take the entry 2 ticks above the mid-band. You get paid and you exit. And then it goes up and you've got momentum and potential to break again. You take your entry, quick profits, and then when it pulls back to the area inside of triggers, you just add on and take them off. And this is amazing, Bob. Great job. Does everybody see it? Recognize the pattern dance. You're calling this the small chart mid-band dance. When it keeps pulling back to the area inside of triggers, and Bob says, that's rules met, that's rules met, that's rules met. I'm just going to add on. I'll take profits and add on, and take profits and add on. Great trading, Bob. You're kind of the king of the double dip now. The next trade's always coming. You don't have to hold forever. Just get paid. Odds favorable, 50-50. Waited for confirmation bar because of the 50-50. And you were able to make money. Nice trade. Double Dipper Bob. Great trade, Jen. Instead of trading into the areas, you waited until they had the potential to break. Beautifully defined entry. You wait for confirmation because divergence on a 50-50. And you make money. Really nicely done, Jen. Why don't we have to trade into termination conditions? Because they all break eventually or reverse and go the other way. Large chart still good but losing momentum. Late entry, you're outside dealing with AAA. Just didn't leave yourself any room. And lesson there is if you're late, wait, there's always another entry, right? You jumped in just above your target, and with those weak trigger, yeah, it happens though. It happens sometimes because you're like, oh, that was my trade. And then you're like, rats. I should have just waited. Good lesson, Pete. Thank you. And then with everything down, Pete says, and then Pete, this is why it didn't clear the one-to-ones. And I feel like, well, as long as you write that, I have to address it. So guys, these lines can all create a bounce. And that's the only thing I want you to think. It doesn't matter what they are. So if you're waiting to take just a jump in, just, oh man, I hope momentum carries me, it's easier to let the back of the bar clear. That's it. I'm not telling you how to trade. Pete knows. Pete's got his lessons in here. But getting in a few ticks lower keeps you out of the, oh no, I hope it doesn't bounce phase. It's a great trade though, Pete. Andy Man says, goals met aplenty. Odds favorable, clear path from a pivot stop out. And then you just jump in and jump out with all that momentum. 40 ticks on a one lot is still nice money. Great trade, Andy. Momentum and path, find a way. Momentum and path, find a way. That's it. That's all you're doing. With everything screaming up and nothing to create a bounce, Andy says, I can take 40 ticks real quick on the NASDAQ. That's $200. It's a great trade, Andy. Nicely done. All right, Jerry. Hold on. We're going to do this because we got the Jerry show coming. I love it. I'm just going to click on all of your pictures. And we'll go through it. Weak bottom. Weak triggers, but a clear path. So, just to be clear, Jerry, you didn't have momentum on any chart, but since you had a clear path, you just jumped in and hoped for the best, and it worked out. Okay. Clear path, nothing to create a bounce. Same thing. You're on the tail end of momentum. So, Jerry, this is the same lesson. Cool. And this is the same lesson. So you're working on your own thing, right? But as long as your price bars are at these fibs, these are the potential things that happen. These big bounces. And these jump-in trades tend to work better if you let the back of the bar clear trouble. And then it makes it a little easier. But I know you're working on something. Same picture, same picture. No momentum, but you have a clear path. You just jump in and hope for the best, and you get it. And I like that with no momentum, your second target is on the other side of trouble. Doesn't make sense to me, but this is your plan. Weak bottom, strong triggers, just jump in, out at trouble. I like it. I see it's consistent. Weak top, not in after trouble, you're in at trouble, big difference. So are you actually taking these trades, or are you coming back and saying this is what I would have done? Taking them on sim? Okay. Just jumping in with momentum, out at trouble, out when trouble bounces. It's consistent, Jerry. I like it. Weak top, strong triggers. All that momentum, you jump in on the other side of the fib and you just hold it. So Jerry, I think, and let me show you what I mean, just for grins. And this is a small chart. Let me blow it up a little bit, and you'll see exactly why I say this. Price hit this blue fib, and it spiked. Do you see it? That's what the tail is. The tail is a spike. It's a fluctuation in price right at the key area. Again, it's a fluctuation in price right at an area. It's a bounce right at an area. It's a bounce right at an area. It's a bounce right at an area. And I think it happens more often than it doesn't. You see all of these spikes and these bounces, and this is probably a good example because a lot of people were probably thinking, go long, go long, go long. And notice how it's the one-to-ones that create that small chart bounce. So when you're doing those just jump in trades, there it is again at the one-to-ones. You give yourself such an advantage if you just let it get to the other side of the bouncy stuff. 1-to-1s create a bounce. 1-to-1s create indecision. Divergence high creates indecision. So you see it repeatedly in this little area. Does that make sense, Jerry? And guys, again, it's not my job to tell you how to trade. But if there's something that I see that might give that little edge, that little bit of an edge, then that's kind of, that's what I'm going to do. Because I like your idea. You're letting momentum lead the way. It's good stuff, Jerry. You're finding your way to use the software. And I think that's probably one of the greatest things. Same on CL, Steve. On crude oil and the S&P, I don't need these pink 1-to-1s. The swings aren't big enough. When you start getting into those 34 charts, it's not the market, it's the time frame size. So it's not the market. It's not because it's crude oil. It's because it's a 13.2. Pete, how do you get your reversal bar markers back on your charts? Right click and go to indicators for me, Pete. And go to T3, Fibs, Pros, Synthetic. And make sure that your reversal bar markers are turned on. Show reversals. And if that's turned on, I would right click in F5 and rerun Ninja Script. And if that doesn't do it, I would build a new chart. That would be my order of operations on that one. Let me know if that helps. So what are we looking at now? We're looking at strong bottom because it reversed the market. Odds favorable, but we've reached a mid-band and the large triggers are below the reversal bar marker. They're a full bar away, guys. This is a look where the mid-band is behaving as a termination condition because of the distance back to the large triggers. And look at the size of the retracement zone here. That's a big push. What? I don't know which trade you're in, Cindy. You're going up? I don't see rules, Matt. Not for me, not that I just taught. I can't wait to see your chart and why you did it. There's probably a great lesson for me in there. And guys, this is gold. There's that crazy look. I'm going to right click and I'm going to reload all historical data. And let's see if that fixes it. Guys, I'm all out of pictures, which means now it's time for questions. We'll see if that fixes my triggers on the small chart. It didn't, did it? Oh, maybe it's still going. Still calculating. Everybody have a good weekend? It's a quiet class today. KISS plan is your stepping stone. I think Jerry, 1967, you're proving that you don't have to follow the KISS plan, right? You can create your own plan. Jen, isn't that the truth? You know what that means, right? Like, what we can take from that comment, Jen, is that you're never happy. There's no pleasing you. There's no pleasing you. Oh, you know what, Jerry, we got one here. Jen. Weak bottom, weak triggers directly into a termination condition. And look at that. You got lucky, Jerry. So you had no momentum, no clear path, no areas inside of triggers, and you made money. So Jerry, this is what I want you to ask yourself. This is the question that I want you to ask yourself. If I took that weak trigger trade directly into termination conditions, am I going to win more than I lose? Am I going to win this look? Divergence from a fib with weakness? No. So Jerry, you got to write that somewhere in here. You got to take a second and say, "Oh man, this wasn't my trade. This wasn't the best look." And Jerry, what you're not doing is you're not jumping in. Like, you're just jumping in, but you're jumping in with rough conditions. Could you imagine, picture if you will, Jerry, odds favorable momentum and nothing but room to that target. Odds favorable momentum and nothing but room to that target. Doesn't getting in with advantages make more sense than getting in with disadvantages? That's why we post in the room, guys. And what happens is when everything is all over, well, I made 36 million bajillion trillion zillion dollars, so this plan is pretty kick-ass. But the reality is it doesn't last. That it goes away. And you guys that are teaching yourself to trade without advantages, and to trade without one advantage, cool, right? Manage assertively. But when you start forfeiting everything good under the sun, the likelihood of success goes down dramatically. And Jerry, the idea isn't to do it just on simulator and prove how great you can be, but rather to do it and know that your rules are met, and know that it's repeatable, and know that this is viable to create a career. So when we talk in the morning, we talk about trading when the rules are met, right? And here's a great example. Strong bottom, odds favorable, potential to break, perfect entry, beautiful exit. How many times does this happen a day? 5 or 6, maybe? $300 a pop? Jerry, that's the easy one, brother. That's the one that pays dividends. That's the one that you can bank on every day. Oh, and you repeated that one. All right. All pre-vacation better, Dad? How was vacation? Have a good time? Hope so. Good. Vacations are important. Strong bottom, odds favorable, 50-50. South Florida. I like it. Did you go say hi to John? Strong triggers, strong bottom, odds favorable, potential to break, perfect entry a couple ticks above, stop where the market shouldn't go, and profits. And then, just to sound like a broken record, that's the one. These are easy. These are effortless. These are stress-free. Great job. Termination, odds favorable, potential to break. You waited for the confirmation bar. Big range where the market might retrace. Beginning of momentum. I like that. Wait for confirmation. And it makes it easy. Great job on that one too, Better Dad. Nice job. Odds favorable, potential to break, reasonable entry, stopped out. Divergence, right? Divergence is the challenge. And what sucks, if I can say sucks, is every now and then they're going to give you a winner with divergence. More often than not, that's the result. For whatever reason, loss of momentum and I think one thing too, Better Dad, is it's not only the one-to-ones that you're trying to break, but it's also that fib um, 10 points below it. So there's a way bigger range that you're trying to break with that momentum compared to just trying to get through one line. Does that make sense? There's a much larger range that you're trying to get through. Just a little more difficult. It can't be odds favorable momentum, can it? If there's no separation, if your scissors aren't open, it just can't be. And it can't be a clear path. Well, maybe it was. Maybe you got the clear path. I like the shot at it. It's a strong bottom. It's the potential for momentum, but momentum isn't there yet. You take a reasonable entry, your small chart says we're looking good, and it just doesn't work. But remember that valuable lesson. Open scissors, right? Open scissors. Separation is strength. What you have is a market that's hoping to create it, but it hasn't yet. Odds favorable. That stopped printing. Clear path. All right, so here's the question. Why were you waiting for the confirmation bar on this one? If you have odds favorable and a clear path and a pullback to resistance inside of triggers, don't you have everything that you need to take a high probability trend trade? I feel like you do. So what did all of this waiting for confirmation below the one-to-ones do for you? Well, it convinced you that you were going to win, right? But you weren't. And you didn't put your stop behind the reversal bar. And then it even gave you another reversal bar and you refused to accept that. And you end up taking the big loss. When the reality is you could have been in, used the reversal bar, and taken a much, much smaller loss. Does that make sense better, Dad? I think that there's this misconception. And everybody goes through this. And help me out with this. If I wait for a confirmation bar, it gives me a false sense of security. It should be more likely to work with it. Better to wait. Blah, 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 right? So we're like, oh, if I just wait for the confirmation bar, that's better. And if I wait for a confirmation bar and 3 more bars to get it below the area that should create a bounce down, well, then that's even better. But it's not. All you did is, so from your proper entry to your actual entry, that's the amount of risk that you added to that trade. That's the amount of profit potential you took off of that trade. Confirmation bars, use the phrase, right? My entry isn't perfect. And let's see if we can find an example. Well, that's Rockstar there. That's weakness right at a term. Let me see if I can find a decent example. I will find it, dagnabbit. Maybe. All right, so here's a good example. And let's just say hypothetically, My large chart is screaming to the upside and I have no termination conditions. And better dad, this is your small chart at the time. So one of the ways to use confirmation. If my large chart is perfect, because why would we give up advantages if the inch, if my large chart is perfect, but my small chart has a challenge, not a bunch of challenges, has a challenge, I may wait for that confirmation bar. So my large chart's perfect, but my potential entry spot's on the wrong side of the triggers. Better dad, that's an appropriate time to wait for a confirmation bar. This says up, up fast, nothing in the way, but my small chart's just not perfect. So I wait for the reversal bar, and if I don't get it, I don't take the trade. Does that make sense? And why do we do it? Because I'm already where the market shouldn't go. So if I get that up bar, then at least if this thing fails from the wrong side of the triggers, it's less risk. And then conversely, the other side of the coin is if everything is perfect and my entry is clearly defined and there's absolutely nothing wrong with the trade, let's go through it again. Waiting for a confirmation bar means that you don't trust your rules. It means that you don't believe the area inside. Or, better dad, you might say, I have a huge window and I don't want all the risk, right? Then maybe confirmation bar does it. But the risk, no matter where you get in on this trade, is initially 4 to 5 ticks below the trigger. Whether you take the first entry, the lower entry, or the second entry, the risk doesn't change one bit. It's in the exact same spot. Confirmation didn't do anything for you. Getting in at the lowest point does. So, and this isn't just for you, better dad, this is for everybody. If it's perfect, the pattern, the rules say enter at the area inside of favorable large triggers. Confirmation creates a false sense of security. And I see a lot of people taking confirmation bars. This would be an example. Momentum and path, wrong side of the triggers. That's a great way to say, I'll insist on a confirmation bar. Because you had it. You nailed that trade. Gap theory said don't go long here even with a confirmation bar. Gap theory said don't go long here even with a confirmation bar. And if you were in a long trade, mid-band was a great place to take profits. Great trading, better dad. And that was a lesson for everybody. I hope that didn't feel like that was beating up on you. Termination, 2 divergences plus a fib. And Miss Cindy, you jumped in, but it pulled right back to the large triggers, which is cool. And then it hits the yellow 1-to-1's Prince divergence, gets to the wrong side of everything, and you hold it. And then it hits trouble again and just flounders, and you hold it. And then it finally gets to the mid-band with the large triggers a full bar away, and then you're like, okay, I'll exit now. It's a gutsy hold. It really is. But I like the reasoning. Termination, small triggers roll. Your higher probability, Cindy. So in 2004, Nexgen started teaching this trade. Termination, fibs hold, small triggers roll, buy the pullback to the triggers. And that's this one right here. And then they just fight. This is that fight at the fib. And I mean, great job holding through it. Trust in that large chart. Whew. That would give me heartburn and hair loss. But you did it well. But does that make sense, Cindy? Fib holds by the pullback to the small triggers. It looks like the pullback to the large triggers which have rolled. That's the one that Nexgen started teaching 21 years ago. And it takes a little bit of patience. But what it does is it forces those large triggers to roll. And you knew that, and you waited. And there's that false sense of security that one tick above. Remember that these things can create bounces? There's a great example of it. And then it creates another, and they create another. So, nice trade. Great hold. You have more courage than I do. You don't like it? Weak triggers, anything can happen. 3 divergences may terminate the trend. Nothing inside of triggers. Kind of cool, right? Rules help you make decisions. That's all it is. Rules help you make decisions. If I am vocal, I have this, I have that, I have this, well then I'm good. Cindy, can I ask? And you don't I don't want you to answer in the room because it's none of my business. But if you don't like it, why take it? Have you guys ever done that? Have you ever taken a trade and you're like, oh my gosh, this is wrong. This hold is wrong. This stop placement is wrong. These targets don't make sense, but you stay in it anyway? We all have. How do we teach ourselves to not take those trades? How do we teach ourselves? It was too slow. Yeah, I get that. How do we teach ourselves that it's okay to wait, that it's all right, that there's more opportunities, right? Repetition. I think you have to see the next trade set up so that you're comfortable that the next trade is coming. And this is the gold large chart. And if you took that trade and made $300, then it's easier to sit through the non-set. You would think, Cav, not everybody does. That's what my brother used to say. Mark, how many times are you going to trade without momentum until you get sick of losing? How many times are you going to trade into a termination until you get sick of losing? How many times are you going to enter on the wrong side of the triggers until you get sick of losing? And everybody has a different answer. How many times do you have to hear this is momentum and this is weakness until it clicks? And it's just one of those things where everybody does it, and we all have our own levels of stubborn. My kids sent me the funniest picture this weekend. It was a billboard that said, this year 30,000 men will die from stubbornness. And then below that phrase, somebody had spray painted, no, we won't. I was just laughing. I was like, that's all of us, right? So I think trust is it, right? Is trust. Is the next trade coming? Absolutely it is. Next trade's always coming. Recognize your patterns. And Cindy, your thought process was spot on. It really was. Termination, buy the large triggers. What's the expectation mid-band? That's a hard hold, but I don't think that you were misguided. I don't think that it was the wrong hold. I think the expectation was solid. That's the one that I don't understand, though. That stop doesn't make sense to me. That's a huge rundown. Everything turned. That's the one that confuses me. All right, guys, there's our second hour. So I'm going to go take a break. You guys can watch crude oil dance, see what it does. I'm going to draw a circle. We'll see if they actually close the gap back to those triggers like the patterns suggest. When I come back, it's all on you guys. Let me know what you want to talk about. Let me know what you want to see. Let me know what you want to review. Ask questions, post charts, share stories. I'll be back in about 5 minutes. Joel says, don't worry, Mark. I got you. I love it. So guys, there's that gap theory. Does everybody see it? Price reaches the mid-band, large triggers a full bar away, and sure enough, it closes the gap. This is a pattern that you can bank on, and what it does is it keeps you from taking that last long trade. Pretty cool, right? All right, I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Joel, that's what I'm talking about. So you'll be graded on consistency. Weak bottom. Retest the fibs and hope it fails. Entry at reversal, exit at trouble. So Joel, I have to ask. With the smalls up, with the large up, with the second higher divergence, with odds favorable momentum, with no divergence, what made you feel like long was the direction? Okay, I'm sorry. What made you feel like short was the direction? Sorry, I misspoke. There's nothing anywhere. One divergence, higher divergence, third divergence. Why didn't you see that as a weak top? As a weak top and a failure on the fib and everything rolling? You're beyond all the areas, and this is what's troubling. It's the odds favorable momentum. The large chart is showing change. It's showing the small going up. It's showing the large rolling up. It's showing the second higher divergence. And you're on the wrong side of anything that could create a bounce with odds favorable momentum, and you chose the short. And I'm not knocking your trade, Joel. But if I were writing a plan and it was based off of what I see, this is what the plan would have to look like. Large chart must have higher second divergence. Smalls must roll against trade. Can't be clear path. Large triggers must be against trade as well. And then wait for small chart to give odds favorable momentum up and enter short on wrong side of areas against that momentum, but be sure it's not from an area. Does that make sense? And I'm not beating up your trade, but if you go through the chart read, that's a tough way to make a living. But if you said, okay, weak bottom, I'm going to get at least to the good side of trouble. And once you get to the good side of trouble, things begin to roll. It's a low probability scenario. And you're still missing mid-bands and divergence and one-to-ones. And you're missing a lot on this chart that gives some great information. Does that make sense? I would get with Jason because this is like day 4. Without having all your indicators on the small chart. And I don't know if that's intentional. And here's another one. Weak bottom, odds favorable, above everything. Both triggers above the one-to-ones. And with odds favorable momentum, where does it say that? How could I know that? You're trading the big chart. How could I possibly know that? So large chart says up, small's above the large, and you're trading the large chart down. You have the gap theory, so you're trading the gap theory here. That's a gap theory trade. I recognize that. Everything is up and strong. You try to get in before, but once you get to the fib and have the area, it works out. And that's pretty easy to go back down from the termination. I like this one. This one makes sense to me. Termination, then look for confirmation, and you have a fighting chance against that momentum because of the fib and all the triggers below. Good stuff there, Joel. Came from a bad bottom. Looks like you went long. Termination, 100%. Triggers roll. Now it's a strong top. All the terminations in the world. And you choose to go short, and it works out great. Came from a bad bottom, created a great top. I like this. So a bad bottom hits a termination, reverses the market, and because this didn't come from a key area, but that did, it makes it a little easier to take a shot, to take that short, to say, okay, wait a minute. Termination reverses the market. That's a strong top. No divergence, strong triggers. I'm willing to take a shot with that look. I like that, Joel. Odds favorable, momentum up, and the potential to break, and you go short at the trend trade spot. And it works out. Joel, I know you have a plan, brother. I know you do. But man, you fight that large chart a lot. Or at least you are in this series. That's odds favorable, momentum up. That's a tough look. And then once everything says down, it's easy. Fibs hit from a bad bottom, closes the gap, everything rolls, and that's just the easy money. Great job there. Odds favorable, potential to break. Now we're going with the flow, taking the trend trade, easy money. Termination condition, triggers roll. You let the large roll, get up with momentum, easy money. Great job again. Termination, everything rolls. Still learning your ways on the big chart. So now you're going even bigger. Lower divergence, there's your entry. So on this look, Joel, you're still learning the big charts. This is just odds favorable off a term. And this is one of the challenges with using just the big chart. And this may explain why it looks like you're fighting a lot of stuff. I didn't know you were cranking out on a 21. I like it. Reversal bar for entry. But the problem is you have to have bigger stops if your entry chart is a large chart. And I think that's what scares a lot of people is we learn with these cute little 8 to 12 tick stops, and then you get on the large chart. Like I trade a large chart NASDAQ, Joel, and my stop is 30 ticks. Always. Because it has to be. But this is the perfect look, and it's the perfect trade, and it just, you've got to let it marinate. Good stuff though. I like the 2113 look that you have here. Just bigger charts, bigger stops. And there it is, the gap theory on the large chart, and you find a way on the 13.2 to close the gap. That's awesome. It makes sense. Totally makes sense. But if you did this with just the 13.2 and the small chart, you force me into that panic mode. But when you see this chart, you're like, ah, beautiful. It's just a trend trade. It's just a higher time frame. Nicely done. And then with odds favorable momentum and a clear path, reversal bar off the mid band. Perfect. So Joel, all of these pictures make sense now. Because now I know there's a 21-3 there. They all make sense now. Good stuff. And then Josh, you said you've figured it out with 5 days back. I like it. So what is the 13-2, 26? So you'd have to have 28 ticks of risk on this one, right? Joel? And maybe that's the lesson. Get the reversal bar. That's pretty big risk. But the flip side, and that's what people forget, is that it's a pretty big move. If you're waiting for this one to get to trouble, that's 15 points. That's a $750 trade. So the ratios begin to make sense. I love your trading, Joel. I wish I would have seen the 21-3s in the first couple, because now I have to go eat some Tums. But great trading, man. I like it. I mean, that's great usage of a larger chart. And then the fact that you are using the smaller chart to help define entries. So that 21-3 is cranking. You're looking for the short trade. I like it. Great usage of the bigger charts, man. I love it when you guys find your way. There's that frustrating. I've been waiting all day long for this trade, and it didn't get my mid-band inside of triggers. Chris told you to change on large on Friday after class? Right on. Cool. I won't ever tell you what to do. You guys have to do it. I'll tell you if you did it well. Jen, that just doesn't even seem fair, does it? Just missed my entry. And so, how did you miss an entry? So, Jen, can I address that? Jen said I was so patient. You didn't miss the entry. It missed your entry, right? You knew right where your entry was. It just didn't give it to you. That's just not your money. That's frustrating. I know that's frustrating. All right. 21-3. Everything says up. So Joel, I'm going to fight you on this one. You did not get to an area. Not even close. This is weak triggers in the middle of nowhere. So you can look for an opportunity to get back towards that mid band, which you did beautifully. But not in an area. And then it comes down. Gap theory up. Closes it. Lines up. You take the reversal bar with this chart still down. Even though this chart is up, you get the reversal bar and bring it down. You thought we were going down, but the market didn't think so. That happens sometimes, right? That's the gap theory that got you, Joel. You were in that mid band, large triggers just didn't follow, and sure enough, it closed the gap right up to them. Odds favorable, potential to break. Doesn't make the mid band, you get in on the reversal bar, easy money. Odds favorable up, directly into a termination condition, but you get in on the reversal bar with room to trouble on the small chart. Exit on the reversal bar. Ended up missing a good opportunity on the short with the 3 divergences at the termination. Yeah, Joel, that's got to be harder to see though when you go up a level, isn't it? I can see how you missed that. Everything is so slow. You've got to readjust your brain a little bit. And then great one here. Everything says down and you go down with it. This stuff's fun for me, seeing how you guys are doing things. So weak triggers, but clear path. And when it pulls back to the mid band, you say, let's go short. And sure enough, you do. And that's, I don't know, maybe that might even be strong trending, beginning of strong trending there. Nicely done. Just trend trades, one time frame up. There's that gap theory, but maybe in a little late. And it closes to the triggers, and that's where your bounce happens. And then gap theory again, and you write it down. And then everything rolls after the gap theory, and then it's just pretty easy money. Trend trade to finish the business. Nice job, Joel. Long trade, trying to get to the mid band. No, you went short. So I guess just like real life, huh? You fight odds favorable momentum, and that's a tough look because you're trading into the gap theory on the large chart too. Do you see it? Here you have odds favorable and room to the fib, and here you went short into the mid band that was most likely to close the gap to the triggers. And then once you hit resistance, then it's a little easier for you, I think. You still have to respect some stuff. When it's still up this strong, I think you still have to respect those bouncy points on the small chart. Does that make sense? Because if the large chart leads the way, you have to let it. And I like this. But it's kind of like the way on a small chart, it bounces a little bit, like on a 5-1, when a 13-2 holds. I think you're seeing the same thing, just on a higher time frame. So until it really starts to crank, willingness to manage. I like the way you're doing this, Joel. It's pretty cool the way you are working through. And what Joel did, for those of you that are trying to figure out what the heck he did, Joel's still trading two charts. The only thing that's changed is he's gone up a level on both charts, which creates bigger bars, which creates a slower environment. It does mean that risk is a little escalated, but it also means that reward is escalated as well. Great stuff. Yeah, I take all of my trend trades, Joel, on a 34 on the NASDAQ. That's my entry chart. Which means that I have to have bigger risk, which means also that it's pretty easy to hit bigger targets, which is pretty cool. You're welcome. I love this stuff, man. This is fun for me. Sorry it took me a second to catch up with you. That's one of the things that happens too, is guys, it takes me a second. I think you're going to be just fine, Joel. Large chart, weak triggers, divergence. Love momentum, guys. Momentum pushes. There's that termination. This is a pretty good example of why you'll notice that Joel talked about strong tops and bottoms a lot. Didn't make the fib, pulled back to trouble. Didn't make the fib, pulled back to trouble. Finally made the fib. And now they're rocketing the other direction. Do you guys see that? Sellers tried to make their target. We knew where it was. Thank you, Fibonacci. They didn't. The buyers tested the water. They tried, they got close, but didn't. The buyers tested the water. Once they hit that target, the momentum is gone. We know it because of divergence. And look how the market rockets right off of that key area. They fight until they reach it, but once they reach it, off it goes. And guys, you knew exactly where this area was. It's one of the biggest advantages, in my opinion, that Nexgen provides, is you guys know where these large crowds are trying to get to, and you just have to find a way to get there. I updated this one. the you are not the shark picture, guys. Sharks are the big crowd. They're the large crowd. They're the movers and the shakers, guys, and they create trends and they make momentum and they react to areas. And you're not the shark. Let the shark be the shark. Be a remora. Take advantage of what they do. When they create a trend with strength and there's nothing for them to react to, the likelihood of them being successful goes up exponentially. And you don't have to be the first one in with them. Let them risk their money. And you don't have to be the last one out with them. Let them take that little pullback. This guy's about to saw through a tuna. This guy only needs a couple bites to make it to the next meal. And that's kind of what we do, guys. Pretty cool. What do you want to talk about? That was good stuff. Whoops. See that price reached a divergence high and the triggers remain below? Does anybody recognize that as a termination condition? Did anyone recognize 1, 2, 3 divergences in the same price range also a termination condition? I actually don't have the ES up, Better Dad. I was having some troubles this morning. Bad bottom. Hope this would fail because of the bad bottom we came from. Sold going down. Should have entered a bit earlier. Yeah, hope is... There's definitely some hope there. Everything says down. You take the short. And it's pretty easy down to the fib. And should have added more on the trend trade. I like it. Um, 50-50. Weak triggers, 50-50. So Joel, this is kind of an idea of that chili dog a little bit, Joel. So you're hoping the momentum breaks it, right? But by the time you enter, the momentum is gone. And this is a momentum look, but there's no momentum on this chart. That's kind of a tough one. But then when it pulls up and that gap theory is in play, then your trend trade works nicely. So I think this is exactly what you see. As I'm gonna hope the momentum breaks it. If it doesn't, I'll wait for the trend trade. Really nice. Another bad bottom. Instead of just jumping in with the odds favorable, you let it reach the termination and get in on a reversal bar off the termination. Really nicely done. And out of trouble. Great job, Joel. And then it goes right to the termination condition. Strong bottom. Odds favorable. That's your 50-50. 50-50 fails. You let everything roll and find a way to capitalize. There you go. Great patience. Great patience. Let's see if my ES will open up. I was having some tick data, just like the rest of you guys. Having some little challenges with it earlier. Let's see if we can recognize that gap theory without even indicators on there. That happens sometimes. You could have shown a picture though, Better Dad. You could have taken a picture. Would have been a good one for your spreadsheet. For the gap theory. Love the gap theory. Lance, how we doing, man? It's good to see you in week number 2 here. Marky Mark, did you get all your technical issues done? I like it. I like it, I like it. Anybody watch the Masters? Woo! That was some good golf. Guys, some of the patterns you can recognize as you're growing here, there's a lot of them here, and there's so many of the gap theory. That's a good one. That was great. When he missed that putt to win it the first time, I thought, oh my gosh, he's going to blow it. No, Rory, I'm rooting for him. Now I want the new kids to take over, though. Rory got his Grand Slam. Now I want to see the DeChambos and that next round of people come up. How do you not root for Rory? Yep, there's your gap theory, Better Dad. Mid-band straight to the large triggers. Perfect. Good recognition. That's a good one for the spreadsheet. I'm still calculating here. We'll see what happens. What do you guys want to talk about? We still have 30 minutes. We could just watch charts calculate. That's always fun. There they go. There they go. Gold appears to be stuck in a little bit of a range. You know, I never tell you guys when to trade, but when we look at charts and I say, hey, look, termination. I don't worry about it, Jen, because they're too small. And every now and then, they're going to make you believe that they're impactful. Didn't really do anything there. Didn't touch it there. There they did. So you're like, oh my gosh, is it a thing? Didn't really mess with it on either side of those. So, I mean, you're welcome to use them if you want. But what happens is when Nexgen writes rules, so when we're talking about termination conditions, right? We're going through and we're trying to see what's the most likely. So here they break. Here they held. Here they break. And I don't know, these are with other ones. So here they held. So what we're doing is we're going, okay, if price reaches a pink 1-to-1, does it hold more than it does not? And the answer is no. And the end result is pink 1-to-1s, not a term on a 13-2 chart. And then we did the same thing for fibs, and the answer was yes. And we did it for divergence highs, and the answer was yes. So we did it for divergence lows, and the answer was yes. And what's hard, Jen, and you may not need this lesson, but you sparked me into a conversation, is that people see it hold once, one time, and they feel like, man, it held, and I could have made all the money the other direction. I'm going to change my plan. Or it broke that one time, and I could have made all that money, but I didn't. And now I'm going to change my plan. And I think that human nature is very short-sighted. It's very it's not the one time that it breaks, right? Yeah, because it did just hold. But what else do you see, Jen? So you say the triggers hold. I say I had weakness and divergence and weakness and a second higher weakness. And I think that there's more to it than just those pink one-to-ones. So if, hold on. Let's do this real quick. So check it out. Well, that divergence wasn't there. That printed up here. But watch this, Jen. So what if you were looking at it without the pink one-to-ones? Couldn't you say that I don't have momentum? Rule number one. And at the bottom of that move, I still didn't have a clear path. So I have no momentum, and the large triggers didn't quite break below. So I'm already missing the first two advantages. And I had divergence, and I had weak triggers. So with or without one-to-ones, you're already giving up all the advantages. So it's kind of cool. And it doesn't mean that they don't have a play in it, but overall, they're not as substantial. And then, of course, if you go to, like Joel's using that 21 chart. That's a bigger time frame. I might give them a little more credence. But weakness and not having a clear path and no areas was enough for me. It just overran. That's fun. I like stuff like that. I like saying, this is what I think. Let me scroll back and find 10 pictures of it. Jen. Because you don't have a plan yet. If only you had a plan. It is. It is on boring days where you can start to fabricate, right? Oh man, I haven't been in a trade. You know, I've gone 3 hours before class, Jen, and not taken a trade. And I've gone 2 hours after class and not taken a trade. And it drives me nuts the same way it drives you nuts. And that's why I think if it's been too long, just walk away for a little bit. Go run a lap. Yeah, and then because you're annoyed on the missed entry, I have to walk away. I have to go do something other than hope, or wish that my rules would be met. And sometimes it's just, I don't know, I go sit on the couch with a dog for 5 minutes. And then when I come back and I look at my chart, it doesn't seem like it's been forever. Waiting for your neighbor, 10 minutes, you're going for a walk, I like it. I like it. I think I've said it before. The hardest thing that you'll ever do is nothing. My ES triggers are jacked up. The hardest thing that you'll ever do as a day trader is absolutely nothing. It's like being put in timeout. Whoa. I need my clicky thing on. There it is. It's like being 8 and being put in timeout, right? I want to go play. I want to be in a trade. I want to do something. But I don't have a clear path. And I didn't have a clear path here. And I didn't have a clear path here. And I didn't have a clear path here. And gold is telling me, Mark, just relax. We'll sort it out. The buyers and sellers will sort it out. Jumping in and losing today's wins is silliness. Yep. But how many times do we have to be silly before it sticks? How many times do we have to be silly before it sticks? Look at all those divergences right at the low. It's not a clear path. So I'm telling you, I'm tempted to go get a psychology degree just so I can have an official say on it. But so they love silliness, I guess so. I don't believe prop firms want you to lose. I think prop firms offer you the ability to not lose everything. So if these guys have a $50 prop firm fee, right? My first day trading live, guys, I would have had to reset my account 100 times to match the losses that I took in my first day as a live trader. I lost $5,000 my first day. I'd like to think that I wouldn't reset an account 100 times in 2 hours. But that's what I would have had to do. Is I would have had to, and so prop firms give you the ability to test your plan, to see how you react, to decide whether or not you're patient. Do you know your rules well enough to put a limit order at resistance inside of triggers when everything is down with a clear path, right? And are you capable of waiting for it? That's one of the reasons I'm so excited. One of the reasons I'm so excited about Nexgen's prop firm coming to be here in the next couple weeks is, guys, we want you to win. We want you to have a great plan. We want you to make money every day, because if you're making money, we're making money. Steve says higher time frames are less stress for calculations. Odds favorable. Chili Dog didn't quite clear the time frame. And out at trouble. Great job. And instead of 180, Steve, now you're at 360 on the 2 lot. Same look. Exact same look. It's just a little more risk. Odds favorable. Potential to break. Momentum-based entry, quick profits, 275. So, Steve, not chili dogs. Not chili dogs. Because chili dog has a set of rules that you're not following. It's a trade, and it's a trade with rules. And what you're doing is, with momentum, you are jumping the fudge in and riding that momentum. And there's a big difference, because you didn't clear trouble on the small chart. You didn't clear trouble on the large chart. You're taking this momentum and its potential to break areas, and you're riding it because the momentum is matched on the small chart and taking quick profits. But it's not a chili dog trade. And I only say that because Ron worked hard on creating the chili dog trade. You're just jumping in with momentum. And it's working out because it's hard to stop momentum on a large chart. Does that make sense, Steve? Without sounding like I'm pooping on your parade? You're trading the potential for areas to break. I love it. I have zero qualms with it. It's just not the chili dog. It'd be like taking a momentum trade and calling it a trend trade. Well, it's not. And maybe if you manage it like a trend trade, you might lose more than you win. So by knowing what kind of trade it is, at least it gives you an idea of how to manage it. And the management on those two are similar, so works out. Right on. I like it. And Steve, you know it's just because I read your charts. And if I see an annotation that doesn't correspond with the known vernacular, we'll say, then I feel as though I have to address it. How's that for defining where the market was likely to go? Right back into it. And now they're breaking. Good stuff. I like it, Steve. I like your trades very much. And because you know it's a momentum style trade, you're still managing it like a momentum style trade. It's not like you're just jumping in and hoping for trend trade results. So all the praise, just pointing out what I saw. Good stuff. Like this would be the chili dog trade. Pow. Back of the bar clears trouble. Ride momentum. Make the money. Jen, are you not chili dogging anymore? Because that one did. That was that one. Pretty close. The stop on your chart is the same rule as the small charts? On the 13-2-21, Joel? It's hard to say yes to that, Joel, because hold on. And let me show you why. Because you don't have synthetic triggers. So I don't have a where the market shouldn't go spot with only large triggers. It's just a momentum indicator. So you could use the reversal bars for sure. And since you're entering on the reversal bars, it makes sense to use that one. One thing you could do, Joel, if you were so inclined, is you could right click on your 13-2. And if you go to templates, if you wanted it to look like a 5-1, if you wanted those large and synthetics, you could load the NASDAQ 13-2 dynamic Renko bar. And what that does, excuse me, goodness gracious. And what that does is that'll make your 13-2 look just like a 5-1. That's how people do it with the NASDAQ. So you could get this look on your 13-2 with that NASDAQ template if you wanted to play around with that. But I think since you're entering on reversal bars, that reversal bar, when the rules are met, redefines where your stop goes anyway. So if you were looking for the short trade here off the mid band, you enter on the reversal bar, then your stop is just beyond that. It becomes a little more challenging as you try to tighten up. Because what happens is if you're not in till here and trouble is here, it's hard to define where to tighten risk. That was the one thing that I was working through because my NASDAQ trading, if you look at my NASDAQ chart, I trade one chart and I use a couple zones from TradingView. But when I enter a trade, you know, it's the NASDAQ. So my next target might be way off in the distance, which means that I have to pick an arbitrary number. So that's what I was doing this morning. And guys, I'm telling you, the study part of this is everything. Yeah, I use a 34.5 Better Dad. It's a little different methodology. But this morning, that's what I was doing. I was working on different ideas on stop placement and where to put break evens and how to chase it and what numbers and all that. No. NASDAQ chills, we on too many meds. No, I don't even have a 13.2 Better Dad. I trade this chart with odds favorable momentum and a clear path. And I look for my opportunities on the pullback. Well, I've been doing this for a while. So you'll get there. But I don't just trade it. So I also have TradingView. And my TradingView, I paid for an indicator that creates areas, supply and demand. And I respect those a little bit. So there's a little more to it. There's a little more than, but it is. It's odds favorable and clear path. That's it. That's my whole plan. And I'm telling you guys, you'll find a way. Uh-oh. If all you waited for was odds favorable on a clear path, you would just have to figure out, where does my entry go, right? You would just have to figure out, where does my entry go? Where does my entry go? I do, Jen, because that's what my plan says. How hard is it to stop a market with strong triggers? Have you guys ever just looked at that? How hard is it to stop a market with strong triggers if there's not an area in the way? How often, let's look at this real quick. Let's find an instance where with odds favorable momentum and no areas, the market just stopped. That was a 50-50. That was weak triggers. That was weak triggers. That was weak triggers. Still haven't found one. There we go. Odds favorable clear path. Just a little deeper retracement. So there's our first one. Those were weak. Those were weak. There we go. There's our second one. There's one. And then let's do this. Whoops. That's not what I meant to do. Let me put a box around this. And I would take that loser all day long. Let's go back to that one on the small chart and see if the small chart gave any indication of change. Ah, what time was that one? Oh, maybe that was a different day. I forgot that we were scrolling back further. Looking for that box. There it is. So Jen, that's what happened on that particular box. So I'm trading without a small chart. If you had a small chart, you still had indication that that strong triggers and clear path was going to fail. Does that make sense? So guys, I'm not saying just trade a large chart because you have an even higher advantage, large chart, small chart. But I think we went through it with odds favorable momentum and a clear path. It's freaking hard to stop that market without a key Fibonacci area near there. Does that make sense? And Jen, that is why I insist on odds favorable momentum in my trading plan. That's why there has to be separation between the triggers for me to feel comfortable risking money on a trade. Same advantage I teach in this room every day. All right, weak top. All right, better dad, I'm going to disagree. So if you reach a mid band and the large triggers are a full bar away, isn't that a termination condition? Watch how language sets you up for success. And when that termination condition, no, there is no guess, right? It is. If price reaches a mid band and the large triggers are a full bar away, that gap theory that you've been learning, that you've been studying, that's okay. But let's not I guess it. Let's take all the guesswork out of it 100%. If price reaches the large chart midband and the triggers are a full bar away, it is a termination condition. So when your termination condition reversed the market, we can call it a strong top. Does that make sense? Awesome. From that strong top, you got momentum and your path was clear, but the entry wasn't perfect. And this is that time where, okay, this is amazing. This is not. Let me wait for confirmation. And yeah, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars past the reversal bar. That's pretty excessive for a late entry. And it made it tough to manage. And this is that one Pete earlier said, man, if it's that far gone, it's not really the same trade. But you still had odds favorable and a clear path, but you still didn't have areas inside of triggers. So it's not like there were high probability trend trade rules met on the small chart again. It's a tough look. Quick exit, make a little money, and then wait for the next confirmation bar. It's a great look on the large chart. Small chart just wasn't giving you the pretty stuff. Strong triggers, just jump in, JTFI. And then when they're weak, get out with a loss of momentum. And this is the hard part, Joel, about those big charts, is you give a lot back. You give a lot back. But I mean, what do you do? Once you have weakness but this is strong trending, I don't know. I suppose you could ride the back of those synthetics. I don't know. You're going to have to go take some pictures. And then when you have odds favorable in a clear path, maybe riding the back of the synthetics isn't as appropriate. There's your termination. Large triggers a full bar away. That was your entry. Out at trouble. And then when everything's going down, you just kind of jump in. And I don't know where you put a stop on this one. But I don't know. If you're just jumping in, I don't know how you pick your stop. That's tough. Break even. I like it. Not willing to lose. Because with this look, where's your next potential entry? All the way up at 1987. No reason to give it all back. I don't know. Joel, you're going to have to go take a bunch of pictures, man. Because if you're not entering on the reversal bar, I'm trying to just play it through my head. And that's what I was doing this morning, because I'm in the same position, Joel. So if I take, and I'm using a 34. So what you're doing with the 21, and you've been around a while, you're using like the 13 and an 8, not a 5. This would have to be that 34. And maybe that's something to look at. Is see how the 34-13 works. And if that gives you a little better entries and maybe a little bigger moves, I don't know. It's fun though to play, isn't it? It's fun though to try and figure these things out and learn them. I'm enjoying it. Termination. Everything says down, but your large chart says up. And you said you waited for the triggers to roll. All right. What kind of trade is this, Better Dad? Okay. So large chart termination, gap theory, closes the gap, starts back up. Can't be a high probability trend trade if your large and synthetics are aiming down. The only way to have, like, and there's no areas. So between, it's a tough look. Because this chart says we're more likely to go up. I see it 100%. So what if, hypothetically, let's talk through it. And I don't know that I have the right answer, but termination says no more shorts, without a doubt, right? I like that. You're not going short. And then it comes up, reaches the midband, and it closes the gap all the way back to the synthetics. And your large triggers don't do much, and the smalls stay above. So right here, you're thinking, all right, that was probably a bottom. They're working it out, right? So let me let them close the gap. And that's where they close the gap. And that would have been probably the first loss. No, there is no momentum on the small chart though. And then they close, then they bounce and they go lower. Hold on. And that is your second reversal bar. And then your third reversal bar. So I don't know, it's a tough look. Because you don't take this long into the gap theory. Here they finally close the gap, but the small triggers are down. This is your first close on the correct side of the small triggers. So I'm just trying to work it out here because your small chart sucks. Your large chart's giving you the, hey, let's look long. And there's that whole ugliness here, without a doubt. A lot of people, if they're trying to trade the gap, they wait for this right here, that divergence, that loss of momentum. You're done posting today? Well, is it because you don't like what I'm saying? I like this. I'm just trying to figure out how to make it repeatable. No, there shouldn't be any. Dude, your large chart is rock star. I'm just, part of my job, Better Dad, is to help figure out maybe a better entry. I think that you got it. And the only thing I can think is see how the small triggers actually rolled and turned green and then it pulls back to them? I think you might have been one bar early, but I think your read was awesome and the anticipation and the patience was great. I'm just wondering if there's something there. I would have been looking right here as well, but it didn't give it. But it didn't get it. Yeah. No, it totally makes sense. Totally makes sense. But sometimes you have to talk through it Because everything that we talk through right here is you developing the patience to capitalize on that look. You have to know why the patience is needed. You have to know why so that you can repeat it, right? And I think you caught them right as they were rolling, and then once they start to open, it gives a second chance. This is the kind of look where I'm looking for a pullback right here. If I'm not taking this one, I'm looking for that little snapback right here to the small triggers right at a mid-band. Because that's the Nexgen momentum trade. And I'm trying to make sense of this one. And it just didn't give it to you. Which is, I don't know enough about Dow. So if we wipe this clean, right here is the Nexgen taught entry. But I think your patience waiting for those triggers to roll was pretty rad. I think that was great patience. It's just me talking through it better, Dad. There shouldn't be any self-shaming. This is a kick-ass read, great patience, reason for entry, and it worked out awesome, man. You got to avoid that temptation to beat your own ass up. Because you actually did it really well.